What is good, guys? It's Rey-Jay back with another video, and this one will break down something very important that's going on with the markets and why the market's pretty red for the pre-market and what this tells us about the markets moving forward. I'm also going to break down what data just came out, what's going to be dropping over the next couple of hours/minutes that's going to be affecting the market as well. And I'm going to talk about the technicals for SPY, Tesla, and many other tickers out there. Before breaking things down about all this information, let me just mention a couple of things. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. Now, anyways, guys, I want to talk about something else that's very important. Looking at the market, right now in the market's down quite a bit. We're seeing SPY drop in the pre-market, so is Tesla and many of these other stocks. And the reason for that is because some new data drops that is suggesting that the economy is too hot, and we're getting a reaction to what the Fed said yesterday that's delayed. So yesterday, yes, the market was holding up very nicely even after the Fed said some very hawkish things. The market maintained its very strong stance on stuff, but what the Fed said did not really have an effect on us until today. But what really started to drive the market down would be when initial jobless claims just came out. So the data caused the market to cool off. In the video from yesterday, I told you guys the market was holding up nicely. We were stuck in this range, and we'd have to see which direction we break in. But the market was holding up nicely as of yesterday, but things are starting to shift this morning because of what just came out with the data. And now the market's starting to break in the lower end, at least for the time being. So we're going to be watching certain supports and resistances. But what's going on with the market? Why is this happening? Well, the news came out that the private sector companies added 497,000 jobs in June. That's more than double what was expected. So a lot of new jobs were added on the private sector. And we also saw leisure and hospitality leading with over 232,000 and much more than what a lot of people were expecting. Construction was up about 97,000, transportation utilities up 90,000. Now, the market's been dropping off this strong jobs data because of the fact that the Fed said if we keep seeing strong jobs numbers, if the economy is too strong over and over again, they're going to be tightening more. And some of the Fed officials, some of the Fed members, and people from the committee were all saying that if they have to keep doing this, this will likely lead to a mild recession. Many of them actually said that. That's like their actual words. That's a big difference, in their shift. So that's so interesting to be watching for. It's very important that we know this. Let me also now add that for the data that's dropping as of right now, we had initial jobless claims. We had about 248,000 of them, which is aligned with the expectations, but the amount of jobs added was a little bit hotter than what we wanted. Then on top of this, we have Logan from the Fed giving a speech right now. And then we have the PMI report coming out 15 minutes after the market opens. So this could cause a big shift in direction. So expect some volatility 15 minutes after the market opens because of the PMI services data and the composite PMI. And then after that, don't forget that we also have the JOLTS job openings. That's also going to be coming out very, very soon. So this may have an effect on the market. It looks like the market is shifting how it's interpreting the data, okay? It's quite simple. If the jobs numbers are too strong, if the job openings are stronger than expected, this is going to cause the market to cool off even more because of the Fed tightening. The market fears the Fed's going to tighten more, so be ready for this at 10 o'clock a.m. or 30 minutes after the market opens. If these numbers are lower than expected, the market's going to like it. So watch this data very carefully. It's going to be very, very important. If it's as expected, we could get a very mixed response. Other than this, we have some more news. We saw the 10-year Treasury yield jump above 4% after the jobs numbers came out. And finally, don't forget that the Fed is causing some more volatility. Janet Yellen is in China right now. That's about it. That's really significant for the markets. But going forward, now let's talk about the charts just very quickly. What's going on with all these different levels? So on the 4-hour time frame, we're going to be watching this 438 as our next support zone. That's going to be the thing that's going to try to hold up this SPY. Very close to where the 50 EMA is, around this 438 zone. So watch that very carefully. If that fails, then we have the chop zone that I've been talking about before in the 436s, right? The 436.25 to 436.65 area. There's a lot of chop around there, at least historically. If that fails, watch 435. Now, do I think we're going to drop that hard? I would say that around this 438 level, we may see the market try to base because we have our 50 EMA around here. So just watch it very carefully around here, but just to be safe, watch those other support levels. Now, if the market were to bounce back up, you're going to be watching resistance at 440 and then 442. There's going to be some important resistances. And then don't forget we have this gap up here around this 442 level. So if it gets above 440 and starts holding up very nicely, there's a chance it could push for this gap fill from the pre-market around this 442 level. There's another gap all the way up here if you count like the daily chart. So just watch these levels very carefully. We're going to see what happens with all the data dropping. So expect volatility for the first 15 to 30 minutes and watch these levels very carefully. Tesla, however, is quite resilient still. It's currently around this 278 area. It was looking very strong yesterday, forming a very bullish formation, but for now, Tesla's starting to cool off with the market because we got this news that the market is interpreting as negative, but Tesla's not sinking as hard as the market has been. I mean, SPY is down almost 1%. Tesla's also down 1%. It would normally be down over 2%. So it still has some strength. It's still holding up. If Tesla continues to drop, you're going to be watching this 277.68 to 277.75 area as support. Basically, the mid 277 to 278 basically support. If that breaks down, you're going to be watching Tesla get very close to this like 275 to 276 area. And if 275 fails us, we could see even more downside for Tesla, unfortunately. Now, if Tesla tries to hold or base around like the 275 area, and could try to bounce. If it does bounce, you're going to be watching this unfilled gap around this 282 area. And if that ends up getting filled and keeps going, you're going to be watching the next resistance around this 284 to 285 zone. If it breaks this, it's going to fly up to 288 to 290. But for now, we're going to be watching Tesla. How does it react to all this data? There is a possibility it's going to, if it breaks below 277, it's going to try to base around this like 275 area. That's going to be the next major support. We need to see Tesla hold this. Okay, we need to see it hold. If it ends up failing, then it's not going to be too good. However, Tesla's holding up a lot better than the overall market. So for now, let's just presume it's going to try to fight back and try to hold. So let's just watch these levels very carefully, and we will move on from there. For Aapl, we had this potential, falling wedge like pattern that was forming. Are we still in it? I'm going to double check this for you on the 1 hour time frame. Are we still in this wedge? I think we are very close to the support right over here. Let me just double check this. So we're still very close to support. We're actually just at support. That's where Aapl is right now. And for now, it's looking very, very interesting as the market is trying to hold up. If it tries to bounce off the support, it could try to make its way back up to 190, but that really depends on how we react to it. However, there's no guarantee it bounces because we also have the 188 level, which is where our 1 hour 200 EMA happens to be. Below that, we have 187.5, 186.5, and then these other supports in the 185s. If it tries to bounce, it's going to make its way up to about 190, then retest the upper trend line, which is around this 190 area. If it breaks this, it could try to make its way up to about 192.5 again, but we have to watch for confirmation first with all the data dropping. For Nvda, from a technical standpoint, this was looking bullish yesterday, but unfortunately, it is cooling off just a bit. We haven't gotten enough bearish confirmation just yet on it because if you look at the 30-minute time frame, Nvidia is still trying to fight for this 200 EMA. If it breaks below this, you're going to be watching 418. If that fails us, it's going to come all the way down to about the 414 level, 411, 409, then potentially 405, and then 400. If it tries to bounce off this trend line, because we haven't fully broken it just yet, the 200 EMA, bounce off this, you're going to be watching 422 to 423 as resistance. We have this unfilled gap at 425. Then it has this imbalance up here at like 426. If we could break above this line, we're going to be watching that level, 428 and beyond. So overall, looking quite nice. Meta is also outperforming the market after the news involving Instagram and what Meta was doing. For now, Meta has a bearish divergence, so be a little bit careful with this. It may start to cool off with the markets, but we have nice support right here around this 293 area. So I'm going to be watching that very carefully to see how it reacts. If it bounces off this, it could try to make its way up even higher. If it breaks below this, you're going to be watching 290 support and see if this thing could hold. But we have some resistance at 300, but overall, the trend is still outperforming the market. Amazon's very flat, but it's coming down a little bit more. It broke below our support zones. Now that gives Amazon more potential for downside. And if it breaks below 128, you're going to be watching this 127 area. So all the way down here, if 127 fails, then it has the potential to come down to this imbalance at 124. So watch that very carefully. Let's see how Amazon responds to 127 right here. Does it come all the way down here? We'll just have to wait and see. Anyways, guys, I went over the majority of them, except I think I forgot the QQQ. Triple Q is actually dropping quite a bit. This ended up failing as well after the news that just dropped. And once again, guys, in my previous video, I couldn't really predict that the initial jobless claims would look like this. That's the reason why I said to wait for confirmation. At that time, the market was holding up nicely, but now things could change, and that's what happened this morning. So the best thing to do would be to just watch all this data very carefully. We're going to have to wait and see how we get the responses, and we're going to be watching 366 on the triple Q. If that fails, watch 365. If that fails this as well, then we could see more downside. But if the market ends up holding up quite nicely, if we get some kind of balance, watch this 368 level as resistance. If it gets above that, watch 370, then 372 again. But let's just watch it very carefully, see how it responds to these levels. Until then, I will see you guys later on for the next video. Market to the moon, long term is still incredibly bright, and I'll see you guys very soon. Thank you, and peace out.